stock market has shown some promising signs so far this year, but don't get too excited just yet. Joining us now for this morning's Dollar and Cent segment is Steve Darden. He is with the Williams Financial Advisors. Now, Steve, thank you for joining us. All right,
it's good to see you, Summer.
Thank you. Good meeting you. So go ahead and tell us, 401ks and portfolios are looking pretty good, but that doesn't necessarily mean that everything is all roses with Wall Street, right?
Not at this point. I mean, things look good so far this year. We're up about 5% in the stock market, which is a great start to the year. Okay. Some areas that we think we really need to keep zeroed in on going forward. One is interest rates. Okay, if we see just a slow increase in interest rates, that's a healthy sign of a recovery. But if we begin to see a really sharp increase in interest rates, that could pose some problem areas. I don't think we'll see that, but it's something we need to keep our eye on. Consumer spending is another big area that we need to keep our eye on the ball there. So far this year, consumer spending has really hung in there. In spite of high unemployment and problems that you hear about in the economy, consumer spending is doing pretty well right now.
And these are the top primary risks for 2010.
These are the things that we need to keep our eye on. Whether I term them risks, I'm not sure, but just things that we absolutely need to keep our eye on and make sure we don't see them going in the wrong direction, okay? And then government deficits, obviously. The government right now is just spending, 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 which is okay in the early part of a recovery, but we need to begin to see signs of the government really pulling in the reins on spending. And then the last thing that I've been hearing about quite a bit lately is protectionism, which basically is the government beginning to put things in place that would limit access to U.S. markets. And that, I think, could be a real problem area, because we're very, very dependent right now on exports to keep our own economy going.
Well, that kind of brings up the next question. What about we're hearing about the lost manufacturing base here in the U.S. Talk about that.
There's a lot of talk about that, and I don't see it so much in the numbers. And when I say that, in dollar terms, the U.S. still produces about 20% of everything produced on the globe. And number two in terms of countries is China, and they're at 12%. So we're almost twice the size in terms of manufacturing base of our closest competitors. So I don't think that that's a big concern. The high dollar items that get produced right here in this country. The medical equipment, the aerospace equipment, the technology equipment. So I don't think that's a big concern. And again, what we need to make sure we maintain access to is these fast growing countries like Brazil, China, India, Russia. So the last thing that we want to see is anything that looks like protectionism coming out of our government.
Okay, so very quickly, any advice to people that are trying to make these investments, or even just with their 401k?
I think in these areas that I would call risk areas, you just really keep your eye on the ball and make sure you don't see things moving in the wrong direction right now. Right now, the stock market still looks to us like it's fairly valued. So I don't think there's huge risk there as long as these four main points stay on track.
Okay, excellent. Well, thank you for joining us again this morning.
Thank you.